Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Monday, March 24th, 2025. Today's episode begins with a headline: S&P 500 up 1.76%. Here is the chart of the SPX S&P 500. As you can see, this bear flag is no longer looking so much like a bear flag anymore, but we did run into a resistance point, the bottom of this M pattern, which is typically, can be a pretty strong resistance point. So I can expect actually us to continue lower from this previous low that we had made previously. But that's just a guess. That's just me and my crystal ball. Next item on the agenda that popped up on my radar today, the 10-year Treasury note yield and minus the 3-month Treasury yield normalized today. It normalized by 0.01%. We popped right above that zero. That's obviously on the back of the 10-year note yield rising today. I'm going to count this as basically still normalized. It's nothing like the kind of inversion that we saw from October of 2022 until December 13th of 2024. I keep track of this to simply, more than anything else, sort of have the market tell me, what is the Fed's monetary policy doing to the market right now? If this is below zero, it means that it's being strangled by higher rates than what the market wants. And when it's above zero, it means that we're not strangling the economy anymore. So essentially, we've been hovering around zero, unsure what to do overall, but I find it interesting that we did cross above zero today. I said I would keep everyone updated on my short gold position. I'm still holding my short gold position. I'm looking for gold to drop about $50, so at the 1950 level. I've decided again to switch the order of things. I'll do charts, then community topics, and then the rest. So diving straight into the charts, as I mentioned at the beginning, the SPX, we had a sizable bounce. Some chartists will say we are recovering back to a fight zone, but because of the amount that the S&P 500 has dropped already, the probabilities still favor the downside in the S&P 500. I'm kind of predicting another turnaround Tuesday, actually. I think the next leg lower may start tomorrow. Again, just a guess. After all, you gotta kill some bears before you can actually get bearish. The VIX dropping below 20 now, so when you get enough people out of their short positions, the market can be allowed to actually drop further. So that's sort of what I'm predicting here. CNN Fear and Greed Index finally out of the extreme fear zone. Same story. Just like healthy bull markets need to go between extreme greed and neutral, maybe a little bit of fear, bear markets also need to get back to fear and neutral every once in a while, maybe even get into a little bit of greed before it can continue going lower. TLT, my favorite place to be. I noticed a little bit of a pattern here. We have a little bit of a head and shoulders. There's a few problems with this head and shoulders, though. It's not at the top of a move up, it's at the bottom. So normally this isn't the strongest head and shoulders, but it is one. And I wanted to point out that if it plays out, if you take the head to the neck and show that going down to this area, that's a gap fill right here. Gaps must be filled, friends. It actually would not surprise me if Mr. Market wants to go down here to play around in this area, because we gapped above it. Nobody got to play. I will be buying more TMF in this area if we get down there, by the way. The 10-year Treasury note yield is the upside down version of TLT. When it goes down, TLT goes up. For me, this is telling a little bit of a different story. We had this trend line here that we basically touched today, and this chart, this view, makes me see yields actually dropping. The bear flag that we broke out of is still intact. Traders better than myself, namely Gareth Soloway, has been saying we are going back to $70 in crude oil, $70 a barrel. It looks like that might be true. I was not convinced, but today's action, oil went up pretty sizably, 1.7% along with everything else. I think at this point we may touch 70 and then we will go down. The past several shows I've been noting how copper has been forming these very foreboding doji candles here, and then we had on, I guess this is today's candle, yeah, and it closed. So this is a topping tail. It has the entire part of the candle is in the bottom 25% with a long wick. This is a very, very bearish candle. It says that copper wants to go down now, but that's just a chart pattern. Next up, the community topics. I wanted to say thank you for sharing your biggest investing mistake. I loved reading through everybody's comments, heard some really interesting stories. One that really stuck out to me that I wanted to quote from one person's comment said that their situation, and I quote, taught me not to compare my performance to other people so much. When things are going bad for you, you look enviously at other people's performance, but when things are better for you, you suddenly forget the other people. That is just so incredibly true. How often do you see someone else's decisions doing so well? You hear about somebody, made all this money in Fartcoin or whatever. And that psychological game is just, it can be torturous. And yet when you succeed, when you make a bunch of money in something, you don't think about how everybody else feels like left out of the thing that you did so great. So I love that comment. That's a marvelous thing to be thinking about, just in terms of when you are successful in something that you do, like to really actually be proud of yourself, be envious of yourself in those situations. That's kind of the takeaway I'm getting from that idea. Sometimes it's too easy to focus on our mistakes, not the good decisions that we've made. And so that leads me to the next community question. What has been your best investment decision, and what did you learn from that? Personally, for me, I got into uranium basically before it started its crazy run in 2021. In 2020, I was getting into uranium miners. I had heard about them. I had seen it as a value opportunity just because it's been an underinvested area for a very long time. It seemed granted, everything went up, post-COVID, but that was one of the best value decisions that I personally made. So I want to hear what you think your best investment decision was and what you learned from it. Coming up later this week, we have tomorrow, Money. I don't know if that was heard or not. Coming up later this week, we have tomorrow, Tuesday, M2 money supply report coming out. With that recent dip in M2 money supply, it's something to continue keeping a close eye on. Remember, during most recessions, you don't even normally get M2 money supply contraction, but if you do, it can be a very foretelling sign of something really big coming. That report coming out tomorrow morning. And then we have later this week, Thursday, Q4 GDP, the second revision, and Friday, PCE, Fed favorite inflation gauge, coming out on Friday. As always, thank you so much for watching, subscribing, for all the comments. I love interacting with the community here, and the support has been unbelievable, and thank you so much for all of that. Before I go, the daily reminders are still intact. Watch Macro Update to 1125 to hear me explain what I think are the most important daily reminders. And watch Portfolio Update to 1125 to hear me explain my crystal ball ratings and my own personal portfolio. In a nutshell, markets bounced up today. I think they'll go back down tomorrow. But what do I know? I'm just a guy with a crystal ball. And that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. Robschild.